very feverishly setting up the show today, so I've got the chat. So we were talking off air. This is a great thing, grandbabies. We'll talk grandbabies while we're waiting for the show to get kicked off, because that's near and dear to my heart. How many do you have?
I have 4, and I'll have number 5 in March.
Oh, and they all live really close to you, right?
Yes, all but one is in really close. In Roanoke is one, but I have 4 that'll be very close, so it enables me to spoil a lot.
Ours are 8 hours plus away, depending on traffic. So,
but worth every mile.
It's worth every mile. They come down actually quite regularly.
All right, guys, we can get rocking and rolling. In T-minus 3, 2, 1. Guys, welcome to the Tuesday edition of Real Talk. Thank you kindly for joining us. We are live in Charlottesville, the Commonwealth, the country, and the world on the I Love CVille Network. My name is Jerry Miller. It's a pleasure to connect with you guys through this platform, this program presented by Yes Realty Partners, and we thank Intrastate, Pest and Service Companies for being a part of this program as well. Super excited. Keith Smith came up with this fantastic idea, Coffee with the Candidates, which will start on Friday. It's presented by Dave Fafara and Shenandoah Joe's. But folks, we'll put that to a side for now, and we will welcome the star of our show, Keith Smith, who has welcomed the fabulous Julia Roberts to the program. Good morning, everyone.
The Julia Roberts from Fulton Mortgage. How exciting can that be? I'm really looking forward to this conversation. You know, we as real estate agents get this question all the time, right? Where are rates going? What's available? You know, where are we moving forward on it? And I really just kind of wanted to take a deep dive into that. But we're going to let Jerry do the guest intro for those 1 or 2 people who do not know you.
Okay.
Julia, introduce yourself to everybody, you know, hobbies, passions, and interests before we talk shop.
Yeah, and Keith
grandbabies.
Said, good morning. Julia Roberts, Fulton Mortgage, and of course, my passion is helping people, and Keith and I will talk more about that today as I've helped folks with the land trust get those affordable homes. But again, my passion is my grandchildren, and I get up every day. I work very hard so I can spend as much time as possible with them because they're our tomorrow, and we need to mold those little folks into to be great people.
Well said. They're our tomorrow. I love it.
Now I need to call my FaceTime my grandson. I just feel the need to go ahead and do it. We have breakfast every morning with our grandson before they go off to, and that's just the beautiful thing about FaceTime. I'm just going to love on them a little bit. We literally every morning we have breakfast with them at 7 o'clock in the morning. They wave hi, they big smile, and they're off to wherever they're going, and we go do what we got to do. So we get to connect a little bit.
And it makes your day. It starts your day off just
without
the
a
right
doubt,
way.
Without a doubt.
Yes.
Without a doubt.
So, Julia, I would imagine, I don't want to assume, so I'm asking this question. I would imagine 2020 has been red hot and sizzling for you. I would imagine 2021 has been red hot and sizzling for Fulton as well. Give us a snapshot of the last, what do we call it, chaotic 19 months in the mortgage business. Is that safe to say?
Yes, it's very safe to say. And I think all of us in the business are looking for the deep breath. We keep thinking that it's coming, and it hasn't gotten here yet. You know, we haven't taken vacations. We haven't given up because we don't know how long this will last. And we want everyone who wants to take advantage of it, we want to help them get there. So, of course, we're working 7 days a week as long as we need to keep the pipeline going. But as you said, you know, 2020 was just phenomenal. And, of course, we all thought, okay, we're going to see the slowdown in 2021. Hasn't happened.
Not happened, no.
You know, it's actually better. So we've all been very blessed in the mortgage business. We're all very thankful, and we're all trying to give back.
So on Mondays, we do the Monday Market Monitor, and we talk about what's happening over the snapshot week over week, and we were talking about this off air. Last week, ending yesterday, 99 new homes came in the car footprint. 3 weeks ago, that number was 68. So it is inventory is starting to pick up. We've been talking about this for quite some time, that we're starting to see fall inventory pick up, which is only going to make things even busier for
Right.
you.
And
well, hopefully for everybody. And everybody.
The whole supply chain.
The whole supply chain. Well, that's interesting.
Beautiful.
We're going to go to that, but Dr. Lisa Sturtevant did a report that came out yesterday talking about the economic impacts of real estate. And we'll talk about that a little bit later. But when we were chatting off air, we were looking on our Freddie Mac thing, trying to figure out when the last time it was 4%. And according to Freddie Mac, the last time it was 4% was in 2019. The average rate nationwide was 4.46. 18 was 4.3. So we've been talking about this for 2 years plus. One of my concerns is, and I think it may have happened, and you talk to people every day, is everybody thinks this is normal, right? Sub 3 is normal. So how do you have that conversation with somebody looking for a loan?
So everybody doesn't think it's normal, and those of us that have a little bit of age on us know that we're living in a phenomenal time right now, but it's the younger folks, it's the millennials, it's those first-time home buyers that's all their parents are preaching to them now, and we've got to buy a house now because the rates are so low. And when they call you, the first thing they ask is, I need a 3% or lower. I want 3%. You have 3%, right?
Did you ever think you'd have that conversation?
Well, it's no different to when the rates are 4% or 5%.
Sure.
Folks are always looking for the best rate, but again, it all comes down to affordability is number one, but folks were able to buy homes and be successful and make those payments when the rates were 4 and when the rates were 5, and back when I bought my first house at 8.5.
I'm not allowed to say the number that.
I'm 18 for this one.
I'm not allowed to say.
6 and an 8 for me.
Yeah.
Yeah, and we were
I thought
thrilled.
It was cheap money.
Yes, exactly.
I was happy to get it.
It's perception.
Sure.
And you just got to kind of have the conversation about cost. And a lot of folks come to me, and again, we can't lock a rate till you have a contract. So you're never guaranteed anything until you sign a contract and have that application in. So when I quote folks a rate, when they call me and say, "Can you get me pre-qualified so I can go shopping?" At 3%, I'm like, let's pre-qualify you at 3.5. Let's always bank on the conservative side, because we don't know what tomorrow brings. We don't know, you might not find a house for 6 months, but you still want to be able to qualify. So, and that helps put them in that mind frame of don't bank on that.
So
3%.
Let's talk about these two terms you just tossed up, pre-qualification and pre-approval.
Right.
There's two very different documents. You want to talk a little bit about the difference between the two for folks who may not know?
Yeah, so, back in, I'm going to call them the old days. I'm showing my age now, but...
Well, let's define what year are we talking about?
No, we're not going to talk that.
It.
But anyway, people always just wanted a pre-qualification, which means we're going to have a conversation. We're going to put numbers into the system. We're going to pull your credit to get a feel for it. But we're not going to go as far as to get documentation on income and assets and things like that. Well, we still do that somewhat, and usually it's up to the realtor what they feel comfortable with. But in today's market, folks want a pre-approval.
So that's positioning yourself in the strength when you're going to buy, right? So
Absolutely.
We do that. Look, we want a pre-approval. If I'm going to go out and try to get a house for Jerry, you want not a pre-qualification because everybody knows what it means.
Yes.
But a pre-approval means that you've actually kind of done.
I've done a little homework
You've
behind
done a little
the scenes,
bit of
right?
homework, yeah.
And I'll make it even more layman's for those that are watching.
Okay.
The pre-approval in a market that's moving this fast, many multiple offer scenarios, means you are ready to go when you make the offer.
Correct.
That's
correct. So we're going to get asset documentation. We're going to get income documentation, as far as tax returns and things like that, with the client's permission. And we're actually going to run it through underwriting, let a true underwriter look at it, and come back with a pre-approval.
So to simplify it even more, it's real.
It's real.
It's real.
It is.
It actually is a real move forward.
You're legit.
You're legit. You're ready to buy. And it puts you in, because, we've got this cash conversation we have to have, right? There's a lot of cash buyers in the market.
Absolutely.
I think they're dwindling down a little bit, to be frank with you. I'm seeing it on our end of it. A little bit. That's just our experience on our side. But if you have, your pre-approval, the word approval kind of says it all, right? Versus qualification.
Yeah.
So thank you for clarifying.
And most mortgage lenders should be able to go ahead and do that part of it for you and get you to that point.
So off air, we were talking about a product that you guys really specialize in, which is construction perms.
Yep.
New construction is ramping up. It's a little bit struggling right now because of price of materials and inventory, meaning land inventory. But talk about your construction perm product, because that needs a little explanation.
Yeah, and as we were talking before, mortgage lenders do some construction perm lending. It happens to be one of Fulton's niche products, and I say niche, I mean we put a lot of time, energy to make sure we do it correctly for our clients and for the builders. What I will say is, you say it's ramping up for us because that's one of our products. We've never slowed down. This is normal for us, and it continues. What is abnormal is the price range of those homes is skyrocketing because of the cost of building materials. Builders are really struggling right now because they're fixed. The
supply chain is pinched.
It is, and those contracts are fixed cost, construction. So I see a lot of builders putting in a 10 or 15% escalation, and they will show their clients, here's where I quoted your lumber, and here's where it came in at. We need to negotiate that difference. And believe it or not, those folks building those homes are accepting those escalations in the contracts because they have to.
How does that impact you? The increase in commodities.
That's a great question.
So we do a fixed contract. The builder is going to have that discussion with their client.
Oh, wow.
And so it's as we would talk about it as a change order. So it's outside of our contract.
So you would have to so people know with construction perm, you do an appraisal based on a set of plans, specifications, so forth and so on. That's what you lend off of.
So I'll take you through a real short
I would love to hear this.
Real short process. So I get the phone call with the client, and I know folks don't want to hear it, but if you're planning on building, this needs to be a 12-month out discussion. You need to have that first discussion at least 12 months out, because you've got a lot and land, that you've got to consider, and you got to go find, and then you've got to, number one, find a builder, and they're so busy, they're going to tell you it may be 6, 8, 10, 12 months before they can even start.
I think that's a little on the light side these days.
Well, it is, but that's what I'm seeing right now, about 12 months out. So, so we have those discussions of, do you have a lot? Do you have land? Because we can include the lot in our process, buy the lot and do the construction all at once, or you can own your lot and we can do the construction just on already owned. So once we get that, we're going to do a pre-approval just like we do for any loan for construction. We're going to wait then. You're going to need a contract. Once we have a contract, we're going to order an appraisal as completed. So the appraiser is going to take as you said, Keith, the contract plans and specs along with the contract, and they're going to give us an as completed value. And that's what we're going to base our loan to value off of.
But like a change order would be, right? So if we have a substantial change order, and let's call it increase of material, this escalation clause, and we'll talk a little bit more about that in greater detail, because I'm a recovering developer and builder, did this for decades, because this is nothing new, this spike of material on that end of it. But then basically an opportunity is the client can come back to you and say, okay, I've got this 50, whatever the number is on this end of it. You can redo the appraisal and see if it increased in value, right? And help them that way, or they have to bring cash.
It's cash.
They got to bring cash.
Yeah.
They have to cover the delta.
They do. So anytime there's what we call change order, whether it's because of that or whether it's because you put in an extra hardwood flooring versus carpet, anything once the contract is signed, that cash. Change order is cash out of your pocket. So, my conversation again with my builders, and again, a lot of communication needs to go into play here. And that's the key to a good mortgage loan, is good conversation between our parties involved. But you want to have that conversation with your builder that you need to investigate your clients too, that you're doing building, to make sure they have sufficient assets, to cover any
access to assets.
Yes, there you go.
So what she's basically saying, if there's a change order, if the cost of goods goes up, lumber in 2020 skyrocketed, 2.5x in 2020. And you have to go to the table with cash on the table. You better have the cash in the bank or the project is going to stop.
Well, and again, we don't ever want that to happen.
Sure.
So we again, a fixed cost contract is what everyone is going to require.
Sure.
There's some...
No such an animal as a cost plus in your world.
Well, there is for investments,
Sure.
if you're going to do an investment type of
Sure.
loan, but not
Whole different
for
animal.
we're do traditional residential,
Sure.
where we're going to take a one-time construction perm and roll it right into a 30-year fixed.
So let's back it up a little bit and talk about the construction perm end of it, because I had to
Okay.
have this conversation with the client over the weekend because I've done enough of these. So define the term construction perm, right?
Okay.
So it starts at some place,
Okay.
and then it gets built, and where does it end? That's the permanent end of it.
Mm-hmm. So most of our loans are 10 to 12-month construction built. So you're going to go to closing, just like you do normally, and you're going to bring your side of your funds, and then we're also going to put into the pot the construction and or lot loan
Sure.
costs into that. So at your one-time closing, we're going to pay for the lot if we need to, and we're going to put in a bucket those construction funds along with any cash you're bringing to the table. Over a 10 to 12-month span, as that home gets built, the contractor's going to have draws.
Yep.
And usually there are 6 to 9 draws depending on the size of the project, and they're usually at milestones, foundation in,
Performance-based
under
draws.
roof. Yes. So, and we only fund on work that has been completed. So again, if your costs, the builders have to be really on their game right now to keep up with this. But we're going to do a draw as completed throughout the process. Whenever they get that CO, certificate of occupancy, at that point, we do what's called a modification, which means you and I are going to meet together. It's not going back to your attorneys and doing a closing. We're going to modify from an interest-only payment that's happening during construction on each month, that's whatever the outstanding balance is, over to principal and interest.
So to tell you how long I've been doing this, back in the 80s and 90s, you actually did 2 closings.
And some
still
mortgage
happens.
companies still do
Really?
that. Yes. Yep.
Yeah.
Yeah.
Well, pretty much after the great unpleasantness, as our friend Neil Williamson refers to it.
We're always going to reference that.
We're always going to reference that because I like it much better than the depression.
The alternative. Yeah,
Alternative, yeah, right, which is really what it was. But anyway, we won't talk about that. It went away, right? 2008, 2009, 2000. You couldn't get many of these, if any of them, at that point. So I'm super excited that that's out there, because what that has done is that has given smaller builders an opportunity to compete in the marketplace.
Get in the game.
They're in the game. Thank you. They're in the game. The game now. Because what happened is after the great unpleasantness, they were out of the game because they couldn't, unless they had a pot of cash.
They didn't have the cash on their balance sheet.
Right, and nobody was doing build a line of credits anymore, and so forth and so on. So this is exciting for folks who are watching to hear. We have several new constructions going on ourselves, Yonna and I, it's ramping back up. Problem is, 12 months out or more, price is a little high. You've got to have the cash reserves, because you now want gold-plated faucets instead of chrome, and you're going to have to pay that out of your pocket. But as a realtor, I'm excited about the opportunity that this is ramping back up.
Well, and I will say, folks that are going to do construction, they've been working on this for 12 months, so they're well aware of their situation. And, I always tell folks, not everyone can afford to build it, because it's not going and buying a house.
Or has the time.
Yeah.
Well, the entry, other than what to be frank, let's be honest, other than what we're doing at the Land Trust, the entry-level new construction really doesn't exist right now.
I mean,
No.
in Albemarle County or the city of Charlottesville, what's the number? It has an 8 in it, right?
Well, it has an 8, and I think it's climbing. Right, new construction right now in the Albemarle County. It's just amazing. We're negotiating a couple of deals right now that are north of an 8, and it's just hard to put something together in the affordable range, other than what we've done with the Land Trust.
I think something we don't highlight enough, and perhaps we should, we're incredibly under-inventoried. The whole country is under-inventoried.
Right.
We're certainly under-inventoried in Central Virginia. But one of the things we don't highlight enough, my friend, is when new construction comes on the market, this new bright, shiny, sexy thing is at a price point that's driving existing construction price points up. In a lot of ways, new construction is impacting the affordability of Central Virginia. Like we talk about this a lot in the neighborhood I live on the east side in Albemarle County. The new construction that Stanley Martin is doing in Glenmore is gorgeous. But we're talking houses that are half the size of existing construction, oftentimes at price points that are higher than the homes that already exist in the neighborhood.
Well, it's supply and demand, and it's just the basic market dynamics that are going to increase the value of the surrounding neighborhood, and that's and even if the price point isn't that high. Statistics show it actually does increase the value, and some folks will disagree with my comment that I'm making, but if homes were being built at less value, new construction, it actually helps your value increase the value of your house on all the way across the board. But look, the reality of it is, back on the new construction, those who watch the show will know these numbers. When the so-called great unpleasantness happened, we basically are short 5.5 million units nationwide, new construction. And all that's doing is putting a ton of pressure on what's existing, and the process that it takes to go from, hey, let's buy a piece of property to do something is years and years and a substantial amount of capital to get there, and brain damage, to be frank. But personally, I'm excited about it because we get these phone calls all the time. Hey, I want to find a custom builder. I want to buy a lot somewhere in Albemarle County or Fulton or whatever, and I want to build. And we can say, yes, there's a product there to fund it because you don't have a pot of cash. So I'm super excited about it. It's a segment of the market that went away and is now coming back. And all these small and medium builders are doing great work out there.
We got comments for you.
Okay.
And questions.
Okay.
So Stephanie Wells Rhodes, we love you, Stephanie.
Stephanie.
The family behind Intrastate Pest and Service Companies. Intrastate Pest and Service Companies have been helping realtors.
It's your home's best friend.
It is a home's best friend. Helping realtors get to the closing table for over 50 years. They're fantastic. She says, I'm just curious, Julia. Are there first-time home buyer programs for first-time home builders? They have it financed through build and then have to get permit financing at the time of completion.
So a couple of questions there.
Couple questions for you, Stephanie, from Julia.
Okay.
Yeah.
So number one, yes, Stephanie, first-time home buyers, it's no different. They're buying a home. So yes, they can qualify for a construction loan just like they qualify to buy a home. Really no difference in the pre-qualification. It's the process that's totally different. There's so many moving pieces and parts to a construction loan. So where I may have 2 conversations with someone who's out buying an existing home, that's 3, 4, 5, 6 conversations with someone who's trying to buy a lot and build. So yes, there are, but to say it's a first-time home buyer product, it's not like a USDA or FHA where you can get, 97% financing or 100% financing.
Or USDA, which is 100%.
You need a lot more collateral.
Right. Well, and I say this tentatively, and the folks, my partners there at Fulton.
And they're watching.
Yeah. So 90.
No pressure.
I know. We have a 95% product. Okay.
For new construction.
For new construction.
Wow.
Yes.
Let me give you some props on that.
Okay, but let me caveat that.
But there's
a but.
Okay.
There's always a but.
No, let me caveat that. And again, this is why I say I've got to have many conversations, because that 5% has to be at least 20% of the land value. Okay?
Oh.
So it really all comes down to the numbers. And yes, although we do it, the numbers have to work out.
That shouldn't be difficult to hit in this marketplace.
Lots are going for $200,000.
Well.
So we're finding sometimes that the lots and the appraisals, because again, when you go to the appraisal, you have the land value and the build value. So sometime when the appraisal comes back, the appraisal may come in fine, but the lot doesn't get the value. Maybe the house gets more value.
So I think what Stephanie is asking.
I think what she's asking is her son wants to build a home. Is that right, Stephanie? Your son wants to build a home, and she owns
the land.
land.
Absolutely.
And she owns the land and has access to a construction
So it's
company.
really simple. Call Julia.
Yeah, with that, and he's already got his down payment into it if the lot's been given to him. So
well, that's important to say. So if you own the land,
yes, you've got equity.
You got equity.
Yeah,
You've got skin in the game.
Absolutely. So yes, that's absolutely something that he needs to look into, because there again, you get what you want versus having to take what's on the market.
But again, a half a decade ago, that was a little difficult to do in these particular days anyway. So the good news is, if you got the land, you've got the equity. Sit down and give Julia a phone call and kind of go through that. But there's another important part in that, right?
There's a lot of questions coming in for you. You're going to scoop up some business today, Julia Roberts. Scott.
Well, he had a.
I know. Well, Scott Morris, we love you, Scott Morris. Yeah. We love you, Scott Morris.
But he's coming in next Tuesday. Okay. But it's important, because usually the follow-up question I get with that is, well, I want to build the house for myself.
Never.
And that's an important distinction to talk about this. This requires three individuals, right? You've got the lender, the landowner. Let's assume I own the land, and then you've got to go find the builder, and that builder actually has to get approved by you.
That's right. We register all our builders. We vet them, and
that's an important thing to talk about, because I've been through this drill before, right? I never understood why I thought I was going for the loan instead of the buyer for the loan. That's the reason I pivoted and got a big pot of money for a builder line of credit, but that's a different story.
Right.
So talk about that, because it's important, because the question is, well, then I'll build it myself.
Yeah, I get that all the time.
Legally, you can, right? You can, from a permitting perspective, if you have a pot full of cash, you can build your own house. You don't need to be a Class A contractor. But if you're lending them money.
Yeah. So and I tell folks this again, one of our first conversations is, as soon as you know who your builder is, make sure they either know us or we have a conversation with them up front, because we have a registration process where we're going to make sure that the builder, this is something he's been doing, that he's got credit lines with his vendors, that he pays on time. We're going to pull a DPOR report and make sure that all of his licenses and his insurances are in place and up to date.
And his fiscal strength.
Yes, and there's no Better Business Bureau complaints and things like that. We don't, we're there. We're the glue between the builder and the client, and we need to make sure that, because again, people are now, all the builders are busy, so they're kind of grasping at straws at some builders, and you're going to be married to this builder for at least a year, so you need to know them well and make sure you all are on the same field.
Had a conversation with the client not too long ago, and I'll throw it to you to see if you can answer that. What about modulars, right?
Absolutely.
Right, so what's happening now, people are pivoting back to modulars. My personal home is a modular home. I built it in 2000, 8 boxes. Took me 30 days to build a house. To go ahead and do that, is there funding streams available for that?
Yes. Modulars, no different. We're going to vet that builder. We're going to make sure, and we're going to fund it a little differently than we do the draws. There's still draws on the modular, but of course, once that house is set, because they bring it in pieces,
it's almost paid off.
Yeah, we're
it's like 80% or something along those lines.
Yeah, and I don't know what those figures are, but yes, we do the same.
Last time I did one, it was when they dropped it. They wanted 80%. It was loaned out.
And again, we have to make sure we work with that. I'll call them builders, to make sure they understand that they're not going to get paid until that house is set.
So everybody understands typically the way modulars work, you cannot buy something directly from the modular, right? You have to work through a builder. So the builder is the one that is ordering the modular and then delivering it, setting the foundation, and so forth and so on. So you're still dealing with the builder?
And sometimes there's 2 contracts. Correct. So a lot of times we'll see a contract with the manufacturer and a contractor with the builder that's actually going to finish it.
I like it.
So we have a lot of comments coming in. Can we fire away?
Yeah, sorry.
You ready?
We were just having fun.
Okay, this is a follow-up from Stephanie. Stephanie Rhodes. So Stephanie has this. It is in regards to her son. She is a fabulous, fabulous mom. Her son is her youngest. Let me get to it here on the show. So here we go. Yes, her son actually bought the land, and Dad, her son's grandfather, is financing the build but he will need to get financing once complete.
Oh, that's
He
different.
just doesn't have a lot of money to pay out of pocket. And she adds, our family has the Class A to build, just like we did our other homes out in the Keswick area.
Sure.
And she says, just note that the land is being financed with the build. So throw that to you anywhere you want to go here.
So what I think I heard her say is that they're financing the build, they've got the land, they just need a permanent loan
That's
in the
all.
end. So that's going to be just like you going out and doing a purchase. So yes, that's a first-time home buyer product.
So that is a first-time home buyer product?
Yes, because we're only taking out a permanent loan. We're not doing construction there. So depending on what he qualifies for, he can qualify for all of our first-time home buyer products. You know, in my best product there, I always start at the best, and I kind of go down to what you qualify for. We have a Home Ready Plus that'll finance up to 97% with no MI.
So
She says, awesome. Two exclamation points.
Income driven.
We're closing a deal here, right here.
80% of the median income. So, you know,
well, let's take this a little further. This is exactly what you did for the land trust, right? So
Susan Steimart's watching.
Yeah,
and
so-
has comments for you.
So at the end of it, all you're doing is buying an existing home.
Absolutely,
You know, Scott can help you. You can help you. Any loan officer can help you through that process because it's done, it's finished in the first time home buyer. And if it's out where I think it is, they may be able to get a rural loan,
USDA,
USDA out there that may be 100% on that end of it. So good job, guys, making a deal happen. Right?
I'm Brendan Rhodes and Stephanie Rhodes. Please meet Julia Roberts virtually. You check your Facebook notifications after this show. So this one's coming. Terry Hockett says, you absolutely rock. She's watching the program here. You have three of the local builders watching you on the show right now, Julia Roberts. This is a question from Jamie Turner, Mr. Woodbury Forrest, the mayor of Gordonsville. Well, we call him the mayor of Gordonsville here. He says, you just answered my other question about owning the land, so disregard that one for now. But what are some loan products for remodels besides FHA 203K?
Yeah, and we actually don't do the 203K. So we have what's called a home renovation loan.
Okay.
So what we're going to do is we will take, and think of it kind of as construction. So you're going to have a contract with the builder for your renovation cost. We're going to put that with your home, and we're going to send an appraiser out again to do an as completed, and we're going to loan you based on that as completed value with the improvements, and then put you in a loan product that meets your needs for that. And we do it similar to construction where we do draws to the builder depending on the amount of the renovations.
So let me jump in here. Same situation, though. You can't do it yourself. You have to have a Class A contractor do the work. So,
and the builder has to be approved.
He asked this question as well. So Jamie's a mover and a shaker. He's a man with vision, a family guy. He says, Julia, could you do a construction perm to build a duplex where you would live on one side and rent the other side out?
Yes. Yes.
That's a good question.
It's a great question, but I'm going to quantify that. You have to be able to support the total loan.
That's correct.
Right? So your income...
Not with the rental income.
That's exactly right.
Yeah, that's just gravy for you.
That's correct.
So you're going to look at this, that Keith and Yonna's net income or his debt-to-income ratio can support both halves of that structure, the total loan amount, because if the tenant should go away on you, you have to be capable
to carry it.
Yeah. So, and let me just preface.
This is fun.
Yeah. So let me just preface all this with, you know, we at Fulton, you know, I'm very blessed to have a bank back. So, you know, we do portfolio lending. So a lot of times if you don't fit into conventional lending, we do portfolio, and we do portfolio kind of a style convention, and we have what's called exception lending. So when I say yes is always maybe, because I don't know what your credit's like. I don't know what your income. I don't know anything until I get it in front of me. So on the duplex, yes, but it may be an exception. But we can get it done.
So I don't think I've ever said this on the show. Yes, but maybe no yes.
That's real estate, though.
Yeah,
maybe yes, maybe no yes.
As you know, there are variables, but for the right client, we can find a product that meets your need. And again, as he knows, that's not conventional. That's why he's asking. Sure. So we have some unconventional products.
Well, so I think Susan Steimart's commenting on that, and I'd like to talk a little bit, but I want to give a shout out to you guys for what you did for the land trust. I don't know if this is a good opportunity to do that.
You want to get to her
comments?
comments?
So let's get to her comments.
Okay, so Susan Steimart is the executive director now of
the Piedmont Community Land Trust.
Okay. Piedmont Community Land Trust.
Took us,
I know.
Took us 3 freaking years.
For Keith Smith.
Oh, good Lord.
3 years.
3 years to get the name.
I know.
She been in it.
Yeah.
Well,
I've been in it all that time.
Been in it and gets the Sunday phone calls from Keith.
I sit next to this guy for 3 days a week for what, 2+ years?
Yeah.
Susan Steimart, Julia is so helpful for helping folks navigate the mortgage process. Buying a home is not the easiest process, and she really makes it easier for clients. I wish I had gotten my mortgage with Julia Robertson Fulton Bank, and then she highlights what you did for the land trust.
Yeah.
Now I pass it to you.
Thank you, sir. Look, so this is an extremely complicated topic to map out verbally and on a talk show. Make a long story short, we had a previous partner which was a national bank, national firm, and to make a very very short story short, what we do is pretty much a condo. Right, we retain ownership of the land and the improvements. Julia lends money on to do that, and in order to do that, you have to use your own money, right? So that's what Fulton Bank does, and that's my shout out to Fulton Bank. You know, they're not pulling money from the street, they're not pulling money from the feds. They're using what's called portfolio money, which is their own pot of money to do this. And you know me well enough to know that I'm pushing deals as hard as I can, as fast as I can through there. And I've never heard, oh no, we can't lend any more money. It's like bring them on, bring them on, bring them on. And it's super important to give a shout out to you guys because that's a big thing. I mean, you are literally.
What's another option?
Well, I just can't overstate the fact you're putting your cash where your mouth is to solve affordable housing, right?
Yeah, and just not in Charlottesville, a lot of other places.
I know that, but I'm kind of partial to Charlottesville at the moment.
I am too, yeah.
Because we're sitting here. But, you know, so it's an amazing thing. And we were able to, through this little program I kind of structured with Stanley Martin, that for for $140,000, we were able to produce, and we put our 6th one in this weekend, yesterday, right?
Yes.
We closed it yesterday. 6th buyer in there. They're purchasing for $243,750, but they're appraised at $310.
Yeah.
Instant equity.
Instant equity. That's exactly right. So we're able for $140,000. I can't do the math in my head this fast, but 7 times 310, whatever that math amount is, it's close to $3 million worth of product, and we couldn't do it without you. Couldn't do it without Bill Tucker, couldn't do it out with Susan, couldn't do it without Jerry, couldn't do it without our board members, couldn't do it out with Greg Slater. And it takes a village to make this happen. And with a little bit of effort and a little bit of cohesion, we put 6, soon to be 7 families in homes and got 8 more coming. So thank you.
Yeah, you're very welcome. And again, you know, the difference in this product, for those of you who know mortgage lending at all, is that these units are leasehold and not fee simple, which again, what Keith was saying is the leasehold means the buyer does not own the land, but it doesn't mean they're not building equity and they're not building wealth. They're still building all that by owning that home. So what a unique product. And what's so warming is these are our our nurses, our school teachers, these folks in the community that want to live here and work here but can't afford traditional purchases.
And they've given up.
Yes, almost all of them.
They've given up. And it's really interesting when you know, on my end of it, I'm kind of helping coordinate all the relationships and stuff. Like Greg is in the trenches in the sales part of it, because that's how we divided and conquered this. And I don't get to really talk to the buyers until kind of the end of the process. And every single one of them was not about me. Every single one of them, to a person, to a family, was, I'm excited about passing this opportunity on to somebody else. I'm going to own my own home. I'm going to build my little nest egg. And it's not little, it's going to be substantial. And then, because of the requirements, are going to hand it off to somebody that's making substantially less than 80%. And I'm going to let Susan chime in.
She's just chiming in now. 6 out of 10 CLT homeowners will go on to buy a market rate home down the road. I'm saying excellent stat, Susan, right now. Jamie Turner, the gentleman who asked the question about the duplex and the side-by-side, said he's reaching out to you after the show, so I've tagged you in that. Check your notifications for there. Susan says 1 more to go this fall for homes.
Got 2 more in November.
2 more in November.
And then the balance of the 6. We got 8 left there. The balance of 6 is in the first quarter of next year. We've got to wait for Stanley Martin to build them.
That's right. That's right. Sherry Page says, love our girl. Will welcome agents from Real Estate 3, Nest, Avenue, Keller Williams, all on the broadcast right now. Susan says the CLT homes are typically 20 to 40% cheaper than market rate homes. This question coming in, Jerry, please ask Julia her book of business if she can put in perspective the loan she's doing, whether it's existing construction, new construction, and refinances, and the percentage of deals she's doing with each category. That's a hell of a question right there.
It is, and as you know, last year the refinance market was just crazy.
Gangbusters.
It was, and that you couldn't keep up. Again, luckily my portfolio consists of a lot of construction perm lending, so that gets me through when the refinances kind of go away. I am still doing refinances, so that's probably 10% of my business, and then the rest of that business is probably, of that 90%, I would say 50 of that is new construction, and when I say new construction, it's construction to perm, and the following 30%, I guess, is purchase business.
So let's go back to construction perm and rates. Are they typically the same rates, or are they a little bit more, a little bit less?
So again,
Ray Cadell says, I'm here, of course. Make sure we highlight Ray Cadell. We love you, Ray Cadell. Okay.
Well, hold it. No, Ray's in Florida. I think still Ray's still
Ray, are you in Florida? He just wants to be acknowledged. We love you, Ray Cadell, so much.
It's all about Ray. Did you not know
No,
that?
come on. It's that. We love Ray.
we do. He's
You
a
know,
rock in Charlottesville.
he is always near and dear to my heart because of what he does with taps for the vets and 9/11. So I appreciate all that. So.
Sorry to interrupt you.
No, that's fine.
Jerry's having fun.
It's fun, right?
Oh, absolutely.
When I tell you the 3 rules.
This is easy for me because I talk this every day. So,
Sure.
So it's very easy.
Good at it.
So construction perm, I think, is that
So the question I asked was, is construction perms mortgage rates the same,
Yes.
or is there a little bit more?
So again, we are potentially, and I say that because depending on the client and
Sure.
what their need, we may lock in up front or we may lock in at move-in. So, but most of the time we're guaranteeing that rate during construction. So yes, it is going to be a little bit higher. But when I say that, for instance, I'm doing a construction perm right now where it's a 30-year jumbo, okay? And we've locked that in for a 12-month build and a 30-year permanent at 3.5.
So let's talk about what the term, that's an excellent rate.
Yeah.
Let's talk about what the term locked in means for
Okay.
those who are watching who do not know what that term means.
Yeah.
And then second part of that is you can buy rates down. Let's talk about how that process works.
Absolutely. So, so when you're locked in, it means you're guaranteed that rate, okay? But when I say that, normally locked rates are good for 60 days. So if for some reason you don't close within that 60-day period, you're going to have to ask for an extension, and that you could have to pay for that. A lot of times right now, because rates are so stable, we can relock, and it's
Sure.
the same rate. So
But if it starts climbing, that might change.
yes, absolutely. So
But the Fed's kind of given no indication that we're going to see an uptick really anytime soon.
I'm telling my clients you're fine for this year,
Right.
And I think
And into next year.
And into next
Well,
year.
that's a question we're going to get into, crystal
Okay.
balling, but I'd love to hear the rest of this answer.
Yeah,
Okay.
sorry, you're right. I'm doing you. I'm sorry. Keep me on track.
I'm actually trying to learn something here, Miller. Just play with your keyboard. We got this.
So when they're locked
This
in,
is the reason we call
they're-
this the Batman
they're
and Robin show.
Yes, they're guaranteed that rate. And again, on the construction, there's options to lock in from the beginning, but there's options to do because again, during construction's interest only. So if you're going to lock in up front, you're going to pay that permanent rate interest only.
Sure.
But there's an option to just lock in at an ARM rate during construction and then convert to a 30-year fixed rate at the end.
I feel sorry for you because we're going off on a
No, I have so much
I'm
in
trying to
my
stay
brain
on
right
task.
now.
Just jump in and say,
Okay.
guys, shut the hell up. I'm answering a
Okay.
question.
I'm doing a hell of a
Okay.
job. Dude, Neil Williamson giving you props right now. Neil Williamson says this for Julia Robertson. This is high praise from Free Enterprise Forum President Neil Williamson. Julia is one of the finest lenders in the area. She is smart, she's experienced, and she is approachable.
Thank you, Neil. You know I love you too.
So let's finish the second half of my question.
Okay.
Apparently, my ADD has not kicked in today yet. His has, but that's okay. But you can buy. So we're having this conversation collectively. This year, I think we're good. We're talking about rates. Next year, it's going to creep up. We've had this conversation for 2.5 years. My concern was everybody thought sub 3 was normal. We're going to start creeping up to 3.5, 4, somewhere in the next 12 to 24 months if you read all the experts on it. When it starts climbing up, though, can't I buy a rate down? And if I do, what does that look like?
You can, but let's talk a little bit longer term than
Sure.
that. So yes, rates have gone, let's just say from 3.5 to 4. You can always buy your rate down, but what that means is you're taking cash out of your pocket to get that permanent rate. And again, in our lending world,
It's cheap
and
money.
it's number one, 4% is even cheap money versus investing that into the market.
Sure.
And number two, are you really going to be in that loan? And I'm not saying that house.
Sure.
For 30 years.
For more than 10 years.
Yeah, sure.
For whatever reason.
Well,
He's going to say the average person is staying in their home longer. Is that what you were going to say? We spent a lot of time.
would you like me to
together.
leave?
It used to be 7. It's going up.
It used to be 5.
But
Yeah.
I didn't say home. I said loan.
No, I heard that. I
Yeah.
heard that very specifically because I'm paying attention.
So again, and we don't know. You and I don't know.
Yeah, sure.
I say I'm going to be in my house forever, but
Yeah, sure.
who knows?
Who knows?
Yeah.
So I really have that conversation, and we.
So
and
why
we
did you
talk
say
money.
loan? Because I'm really curious why you said loan versus home.
Because for whatever reason you're going to refinance,
Okay,
you're going to
got
maybe
it.
need a cash out.
Got it.
Maybe you, for whatever reason,
Got it.
you divorce. You're going to, you
Got
just
it.
don't know what tomorrow holds. That you're going to need to redo the loan. Maybe
Got
you're
it.
staying in the home,
Got
but
it.
you're going to redo
I'm
that loan.
refinancing or
Yes,
whatever, sure.
Yes,
Sure.
and so you're
Well-
going to put in cash and buy that rate down when the rate's already incredibly low.
So, just to play this out a little further,
Okay.
Typical buyers, and I think you get this all the time, is not so much rate, not so much. I mean, people are like focused on rate, but rate is rate. It's more about what is my monthly nut, right? So what I want to do is I want to buy a house that stays at X dollars a month, and what does that equate to? And I find that people tend to work it backwards than from the top down, which they kind of do that. And the only reason I'm throwing is buy the rate down. If I know I'm going to stay in the house for 10 years and it's going to cost me $2,000 or whatever it is, you may, it may be, if the math works, it may be something you want to do.
But to her point, she's saying you could take that money
And put it in the stock market.
invest it in the market and get 7, 8, 9, 10% return on that money.
But not,
Even more potentially. That's what you're saying.
But
Yeah.
more people are not in the market, and more people are in owning homes, right? So people at this
Curious,
table.
Is that?
Oh yeah,
Yeah.
totally.
And again, when you were talking about cash buyers earlier today, I'm getting some of those cash buyers
Sure,
now
of course.
because those folks are investors,
Sure.
and they're finding, maybe
Yeah,
they're
I'm-
going to pay the loan off in 3 years, but for now, heck,
If
let
I
me play
got-
with the market.
If I
get a
got 3%
loan.
and I put it someplace making 6 or 7, I'm silly. I could do that. But I can tell you, if we can dig up the statistics on it, there's not that, there's more, not that many people, a huge number of people in the stock market and all that stuff. They may be with 401ks, not knowing it and all that kind of great stuff. But, they're not in the market like the three of us may be on a regular basis. But, and I wanted to get it out there as an option, right? So when people are
absolutely.
starting to worry about the interest rates going up a little bit, there's a possibility if it fits you, right, and your part where you are in your life, that you can go ahead and buy it down a little bit and get to a number that you're comfortable with. So we had this conversation off air. Rates are gonna increase.
Is this the question you get the most?
About rates increasing.
What's the number one question you get?
Great question.
That's it. What do you see it doing?
Sure.
What do you?
What's your crystal ball?
Overall, overall, not just rates. What is the housing market? Should I buy now? Should I wait? Is the market, are we going to see more houses on the market in the fall and in the spring? What do I do? And so my answer always is to that. Number one, let's look at your situation now. Let me get you pre-qualified, not a pre-approval, but let's look at your picture. Where are you now, and where are you? Okay, is that comfortable for you? Well, then maybe get someone, a trusted realtor in your life. Let's talk their situation out, and let's just see if there's not a home out there. If it's not, okay, we're in a waiting, but we don't know what COVID's going to do.
Right.
That's the big unknown out here.
We don't know what Powell's going to do.
That's right.
So that's literally the article I read this morning on the Wall Street Journal about inflation. So what do you think inflation is going to do to this market? Our market, what we do?
I think it's going to drive up prices. I hate to say it.
Well, that's what...
and that's what everything that I'm reading is saying. But, okay, let's come back to, again, people still aren't working. People still, there's a ton of jobs available, but yet there's people not working. So I don't see that inflation can rise but so much because our economy needs to stay stable.
So you're saying Powell's going to have to raise the rates to offset this inflation uptick?
I don't think he's going to do that.
And when I say raise, I don't think, when people say raise rates, I think
slightly.
Yes, I think all these alarm bells goes off. When my rates change every day, I can barely tell it. It's an eighth
of an eighth of an eighth of an eighth of an eighth of an eighth.
And we should put in perspective what a 0.5%. It seems dramatic, but 0.5% doesn't really impact things that much. Can you put that in perspective for us?
No.
For $100,000 off the top of your head.
Yeah. Please don't make me. No, if you would have told me,
it's marginal.
It's not worth talking about.
Right.
It's one of these.
Yeah. So it's
maybe two.
I tell my folks, the economy has to continue as it is.
Uh-huh.
We can't do anything abruptly right now because there's too many unknowns.
It's too fragile.
Yes, so we're going to have to stay. And yes, rates need, and my folks are not going to like me for this, rates need to go up just a little bit.
I've been saying that.
We've been talking about this. Don't be afraid to say that because we had
they have to go up to stabilize this.
We had two realtors from Greene County sitting in the seats opposite of us yesterday. And any real estate agent who's watching this, any real estate agent that's part of this, anybody who's in this space
does not love this frenetic craziness.
Does not love this. Yeah. This is not.
She said the same thing.
Right, and so a little bit of rate increase is going to help stabilize it a little bit.
I absolutely believe that.
Help get it a little bit back to normal.
Especially the first-time home buyers who are really in a tough spot.
Well, I think the concern is if rates go up, then what they can buy, their affordability. Right. So there's affordable housing, which is a different conversation. Affordability is how much can I afford to buy? That's back to this, hey, I can afford X whatever the number is per month. That's my affordability index.
Right.
That's not quote unquote affordable housing. Two very different things. So we talked land trust. We talked your crystal ball on.
We got a ton of comments.
Okay, please, let's do that.
A ton of comments. Okay. So this one came up, and it's funny. This just shows you how people watch the show. Nicholas Erpy, Alex Erpy, and Xavier Erpy from Emergent Financial Services. We're talking the CEO, the CFO, and the CMO of a financial firm were here.
Okay.
Someone's referencing the show we did with them, which was...
a few weeks. Oh, God, a month
plus?
Which, thank you. We need to bring him back. Thank you for reminding me.
Jonathan says this. On the show you did with the Emergent Financial Services guys, you guys were talking about overpaying loans and 15-year mortgages versus 30-year mortgages.
Versus the one that we don't want to talk about.
Which is a 40-year mortgage, which is a new mechanism that's on the market, which is nuts. Think about the interest you're paying on a 40-year mortgage.
So if you don't mind me jumping in, as a mortgage loan officer, how do you feel about 40-year mortgages?
So again,
would you recommend that to a client?
A fine line with that one, right?
Well, and again, every client's situation is different.
Sure.
And so, that may be a perfect, unique product, but I think it should be an exception, not a norm.
Yeah.
And I'm not even, and you kind of throw that one at me, so I need to digest that a little bit. But again, I tell people even who are going for 15, go for 30.
Then overpay the 30?
Yeah, or, yes, you can pay it down in 15 years, but it gives you the option to make that lower payment.
So let's talk about
had a crisis.
What hits the fan.
Yes.
So this is a debate that Jerry and I have on this 30 versus 15. I always recommend a 30. Oh, no, if 15 works for you, that's great.
So I'm doing a 15 on mine, overpaying the 15, and the gentleman here from the financial firm, and there's no right answer here. Okay, the gentleman from the financial firm, we're saying, do not overpay the 15. Take that money and invest it into the market instead, because you're going to get a better return than the marginal interest rate you have on your house.
That was a great show.
It was a great show.
Because we went through this whole latte factor thing, which
and
my counter to that, I'll throw it to you. Okay. My counter to that was, I'm real estate heavy already with this building.
Right.
I'm already invested in the market to diversify the portfolio, and there's some peace of mind to have your personal home darn near close to free and clear of debt. Well, helps me sleep at night.
Well, and I understand that, but what I always tell people, not in your particular situation, and again, this is individualized, but that's your best tax deduction. So so why so you need that.
Yeah, but in his circumstances,
it's different. Oh, absolutely, yeah. Right. So again, it goes back to uniqueness, but generally, most people, it's their best investment
and their largest investment.
Yeah, and their best tax deduction.
That's exactly right.
So you don't want to take that away. I say throw that money at the market or at a car loan that's at 5 or 6%,
credit card,
or
debt.
A student or credit. Yes, there's other ways, not your mortgage.
So let's talk about how one can control and buy down their 30-year mortgage to an 18 or a 16. Let's talk about how does one do that?
So generally what I tell folks, if they want to pay their loan off early, you need to make, the general rule of thumb for everybody, one principal payment per year.
One extra
mortgage payment, principal only, per year will get you down to
18, 19.
18, and again, it depends on things, but 18 to 20.
Two.
Yeah.
Get you?
2 principal payments, again,
somewhere in the 15 to 16, 17 range.
What I always tell folks is you can run amortization schedules.
Sure.
You can Google it and do that and put that in there. And if you have a goal, you can run an amortization table, figure out exactly how much money you need to pay to meet that goal.
So my wife and I done that. So in the great unpleasantness, right, I needed to refinance my house to pay the bleeping bank $86,000 a month in interest, right? And we ended up refinancing our house for a huge chunk of money, which we probably shouldn't have done. That was a bad business decision on my part, but I did what I did.
Live and learn.
I live and learn. But we have now, over the course of 10 years, because we've made multiple payments, it's between 2 to 4 principals payments per year, got this back to where we were. And so we walked it back. So it's a very easy path to do, and we always counsel first-time home buyers, or any buyers for that particular matter, pay a couple of extra, if you can do it, buy one less of these a day or whatever,
latte factor,
and buy it down, and you're paying yourself, right? Because that money comes back to you when you go ahead and sell the house. So anything else on the feed, sir?
So I kind of aggregated them here. So this one's coming in about the need for a realtor in new construction, building a home. We know your take. What's Julia's take on that?
It better be the same as you need a loan officer.
Yeah.
I think she's
so
gonna say the
again, you need someone on your side.
Trusted advisor.
And you need someone who understands. So I understand the construction component of it and the loan side of it. You are building a house and you're working with a builder. That still requires a contract.
Sure.
A lot of builders have their own template contracts. There's, and I see a lot of them come in when there's no realtor involved, mainly when they already own the land. So in that instance, sometimes it's okay. If you are buying a lot and you're building a home, you better have a realtor on your side.
Well, I would disagree with you on that. I think you need it on both.
Oh,
because,
I do.
Because just from a numbers perspective, so if you do some of the production folks, they already have baked in the commission. So why not use, you're going to pay it no matter what. So why don't you use a realtor? We do quite a bit of it because of my background on the end of it. And the way
You're like a go-to guy for this because you were a developer.
Right.
You have a Class A license, and you're a realtor, right? And you've been doing this for 30 years. So I can't think of a better one to help navigate new construction than you.
Well, generally
like every side.
So generally that's what happens when we have something like Mrs. Smith says, "Here you go," and then I actually got to work. Who knew?
Yonna's watching.
Oh, sorry.
Yonna's watching right now. Okay.
Hi, honey.
Dan Pettit is zinging you a little bit.
Yeah. So is Dan and Yonna going back and forth?
Yonna's like, oh, that Dan again.
Yeah,
That's what she's doing. Jonas is better 7/8.
Yes,
Yeah.
I know.
Julia knows my lovely wife all too well, or very well. So the reality of it is you need somebody to help, because let's talk about this, great companies, great folks, but that salesperson that you see in that, their fiduciary responsibility is to the company,
Right.
not to you,
Right.
So the commission's baked in, you're paying it no matter what. B,
A lot of people don't know that.
absolutely, they know it now. B, the agent over there, as wonderful as they are and as great as they are to work with, their fiduciary responsibilities to the corporation, not to you. And then, in my particular case, I'm kind of their worst nightmare, because when I do a walkthrough on a framing thing, I go, yeah, you need to fix that, you need to fix that, you need to fix that. The other thing most people also don't know is you get a home inspection. Better damn well get one. And if you go with a builder directly, they probably won't share that with you.
So let me paddle back just a little bit, because I think we've got two different things going on here. So
As usual.
Yeah, as usual. So
Only two.
when you say
Usually
new
3 or 4.
construction, the folks Stanley Martin, Ryan Holmes, they have their in-house lenders.
Yeah.
Okay, and so in that,
But that doesn't mean you have to use them.
No, but it's
Please.
new construction. So yes, you need a realtor. When I talk about new construction, I've got you've got your larger builders in town, and they're doing turnkey. Okay, so
They're
yes,
providing the land, they're providing
everything.
So we're calling
but it's
them production for
yeah,
sake
but it's
of it.
new construction. Okay, when I'm talking a construction, they don't require a construction loan at all. They want permanent financing.
They want
in the
10%
end.
down.
Right.
Give me a check. I'll
That
give you a
is
set of
correct.
keys.
What I'm referring to is your builders.
So let's talk about that.
Yeah, because and I have a lot of builder
Yeah, sure.
friends. I
You
do.
got a few watching here.
So why don't you let me tackle this so this doesn't put you in a bad spot?
Thank you.
Okay.
I think
You got a few watching
I'm
here.
reading your face. So first and foremost, typically the builders that do these custom homes, they already have realtors already baked into their their numbers. So again, it's very similar to the production side. But here's where you really need a real estate agent, because if you're not buying, let's say, a house lot package from the builder, which that does exist, right, in the custom guys, but typically you need to go out and buy this. So you have 2 contracts you're putting together. One is a land acquisition contract, which is very specific. We'll talk about that here in a minute. The second one is the construction end of it. By and large, they're typically modeled after the Blue Ridge Home Builders Association contract. So there's kind of some normalcy there, but they are a little bit different. So you got to take a little bit of time to do it. So let's talk about the land here, right? I'm just trying to save you from having.
And that question's coming up here.
So great. So typically how that'll work is you'll reach out to a real estate agent. You'll go out, start looking at land, and the land contract, high level, is very different than the residential purpose. It has a little thing in there called a study period. And that's what you want to do. So what you want to do is, I'm going to lock in this land. I'm going to say I need 60 days or 90 days, whatever you negotiate on. What I mean by lock in, we're going to put it on the contract. And that gives us this 60 or 90 days to find a builder, to talk to Julia, get our finances put together, figure out how we're going to buy it, right? And then it's contingent upon the buyer's sole discretion. If you can't put these pieces of this puzzle together, you get out, you get your deposit, and you move on. But that first component is super important, And it gives you the opportunity to interview builders. It gives you the opportunity to talk to Julia. It gives you the opportunity to kind of figure out what you want to build. Some of them I've done where I've made the seller drill a well and say, okay, I want verification that we've got certain GPMs in it. So that's really the difference. Did I do it good? Did I make you happy?
Yeah.
I drink gin, by the way. So
This is, here's a good comment. So, Julia, how many new construction loans arrive on your desk with the land already paid off?
Ooh.
50%.
So half. So that's a good one there for you, Stephanie, and that's a good one there for you, Brian, who's asking, Brian, are you in Louisa or Orange? So 50% of the new construction loans that come across your desk, the land is an asset, it's collateral to help justify the loan because there's zero debt on the land.
That's correct.
And that makes the path so much easier.
It does, and either that or it's currently financed, and we're rolling in the remainder of that financing into the construction loan.
Okay.
So let's talk about the opposite of that, the other 50%, right? I don't
identify land.
We have identified
So
the
25% of that other 50, though, are folks who have purchased it and they're paying on it.
Okay.
And then 25% would be just buying the lot out of the gate.
So they're coming to you saying, I want to buy this lot in Albemarle, and I want to build a house, and I want you to finance everything.
Right.
And that's the most challenging?
Yes.
Well, it's because you got to find it, you got to put the pieces, everything we talked about on the land end of it, you have to do, but you're not going to finance 100%. So let's talk about that for a second.
So timeline is the biggest thing. So if you have not identified your lot yet, most of the time you haven't identified your builder. So you're going to find a lot and you're going to fall in love with it, but your builder can't build your house for another 12 months. So I'm finding, and Fulton does a good job at this, of doing, folks are having to do a land loan where they're having to put 20% down. Okay. And then it's interest only for 3 years in our program, knowing that you're going to roll that over into construction. So that's how that's going to work. And again, it's all a timeline. If you've got a builder already lined up who's pretty much ready to go in your contract, and you put a contract on land, I can probably roll both of those in together to the one-time permanent closing. But again, everything's got it. The stars all have to align in that particular
But that's
instance.
anything in the world these days. What we're doing, there's so many stars that have to get, regardless if it's new construction or affordable housing, that has a ton of stars to line up, or existing. But it's important to point out, there's basically at the closing table, there's two contracts, right? There's the one for the land, one for that. For the thing, you're going to satisfy the land at the closing so that the owner of complete ownership, if this is this 25% where you only have, you have a loan on it, or you have something on it on that end of it. Is that correct? Did I get that right? Okay, great.
Dude, I absolutely love this show.
I know you do.
I mean, this is like...
I can tell by your fingers.
I just love learning. I love everything that you bring. This process is complicated, but you make it approachable, which is so difficult. Because sometimes, especially early in your life or early in the buying process, you go to a lender and you're just glazed over because you just get all this information that you have no experience with, and you're like, what did she say? Or what did he say? But you have the skill set of making this tangible and understandable. And that's a testament to you. I would be remiss if I didn't ask a question about what I got going on here with an expert over here. I really would like to do that here.
Executive producer, go.
Okay, all right. The investor opportunities that you had.
Oh, yeah.
She mentioned something before the show started about investor loans for residential. You should get that word out about
So
this.
our chemistry is working, because that's where I was going next.
So again, and we have products to fit everyone, but so when I talk about that, Jerry, and we talked about it a little bit before the show, we do as exceptions for loans that make sense. Okay.
So explain that term,
because.
Please.
Let me just preface a client that I have and tell you. So I have a client that I've been banking and doing mortgages for 10 years probably, and he's an investor, and he has a number of investment homes. Well, Fannie Mae caps the number of financed properties at 10. Okay, even if those properties are in an LLC, if it's a sole proprietorship, that's considered part of that 10.
They tie them all
so
together.
once you're at 10, you're done. You're done as far as the conventional world. So you have to go portfolio at that point, or go commercial. And that's what Jerry and I were talking about. So the commercial world in financing is okay, but for an investor, it's not a long-term cure. Normally, it's a short-term, 5-year with a 20-year AM at the most, something like that. Okay, we've got an exception product, and again, I'm going to preface this for the right person with the right assets and the right liquidity and things like that.
So I'm emailing you my 2-year tax returns.
Okay, so in this particular client, he decided because he's been
Listen to this.
He's doing cash out refinances on his investment property.
So you explain to them what that is.
Okay, so he has a lot of equity in some properties he owns.
So potentially real estate rich and needs some more cash to work with.
Not particularly, but yes, because he wants to buy some more investment properties at some point. But he's been putting a lot of his own money into this, so he wants to recoup that money. So what he's going to do now, while the rates are so low, we are going to do some cash out refinances for him. And again, we have the capability. This is not a 30-year fixed product. We didn't go into that. It's going to be a 30-year AM, but it's going to be a 15-year fixed rate.
Oh, really?
Mm-hmm.
Wow.
I know.
So again, I say this is an exception product.
What's the percentage appraisal got to hit?
75% or lower is your loan to value on that.
So it's important to talk about this because this started getting hair up my back because this felt a lot like 2004, 2005, 2006. Some of these products were out there. The difference was the 75%.
That's right.
Mm-hmm.
They were doing 110%, 120%.
And you're going to get the best rate at 60%.
Yeah.
So the rate's going to be a little higher at 75.
So we're not setting up for failure.
No.
Right? Because there's enough equity in there for the bank. God forbid something happens that, you only have 60 or 75%. And I'd be a bit remiss not to say that as one who went through it, that, we got to be a little careful when we start talking a little bit about that. But that's the reason I jumped in on what the rate is. I remember I told the story yesterday when I was sitting in my office, 2004, 2005, 2006, I'd have loan officers walk in and want to pay me money. I'm talking millions of dollars, and I would say, "There's the door. Bye-bye. See you later." I'm dumb, but I ain't stupid. This is not survive. This is not, going to survive. So cool. Thank you for sharing with us.
How about mechanisms for commercial?
So Fulton Bank, we have a wonderful commercial loan officer. Regional manager Rhonda Roberts here, and
I know Rhonda.
No, not a relative, but Rhonda's great, and she's going to look at every situation differently, and we've got products and, as you call them, mechanisms to help folks in the commercial world. Absolutely.
So one of the great things about Fulton as a big picture, it's actually a bank, right?
Right.
Versus something else like a brokerage or something like that. So you have a little bit more flexibility, and that's what we're hearing today. You have a little bit more flexibility because you're a relatively large bank, if I remember correctly, out of Philly, right? Or
Pennsylvania.
Lancaster
is our headquarters.
Lancaster, thank you. But you have offices down in Richmond, and you're pretty
Virginia Beach,
we have office here
and Charlottesville.
Okay.
It's up on 29 North, right? 29 North, yeah. So the reason I kind of want to throw that out there because you're talking about some products that maybe a normal regular brokerage may not have.
That's correct.
And it's important for me to point out that this is because you're a bank. You can use your portfolio money. Right, we're talking about
the deposits.
You have the deposits to go ahead and do that. And my tax returns are in your inbox, by the way. And
Did you really sign up?
you think I didn't?
No, I believe you. I know you and I are doing like 5. That's what makes this is our biggest strength and our biggest weakness. You know that? Being able to squirrel, fire. This question comes in. Mustache Dan Pettit. When an investor sells, what about his or her recapture tax when selling?
Ooh.
This is not 1031, but selling one of his or her investment properties.
Talk to your tax accountant.
I'm about to say that's a CPA question.
Yeah.
Are you seeing a lot of 1031s?
No.
Okay. I think the 10 for those
they're
that are
few and far between.
Yeah.
So it's not that I'm not seeing it, but I'm not.
But that's more of a market. That's a market thing, right? Because much like what am I going to buy? And I tell you the fact that.
And we're not talking politics.
No.
But for those that are considering doing a 1031,
There's some concerns.
I would very much encourage you to do that 1031 in 2021. Because the 1031, it may be a little bit in peril in 2022, and I'll leave it at that.
Yeah, there's a lot of talk about that. I just don't see the tea leaves going that way, but I may be wrong. But you're 100% right. Everybody that's in that space, and I have clients in that space, they're like, okay, we need to do this now. We need to do this by the end of this year for that very reason.
Yeah. But you were awesome.
Thank you, Jerry.
She is absolutely awesome.
I had a great time.
Yeah.
It's just fun to talk to, and I part of asking to come in here is I wanted to look you in the face in front of all these people and say thank you for all the hard work that you have done for the land trust. We could not have crossed this line. We could not have put 7, 6, 7, actually more than that. I can't remember how many.
Nassau too.
Nassau, so it's 6, 7, 8, 9, 10, almost 12 families. Wow, I didn't realize we'd done that many. 12 families into homes without your help, without the bank. You guys made this possible. We had all these great pieces of the puzzle, but without a lender who's willing to work with us, we just couldn't make it across the finish line. So thank you very much for doing
You're
that.
welcome.
Yeah, thank you. Yonna says the same thing. Yonna Smith watching the broadcast, and she says, thank you, Julia Roberts, for a fantastic show on our program. You've made everything approachable and attainable. So great to have you as part of the program. You've been informative and helpful with providing all these lending and financial details. Super, super, super.
Isn't she a smart lady?
She's beautiful.
And
intelligent.
And intelligent, so.
Yeah. So thank you to Julia Roberts for joining us.
A choice in men.
You're a good dude, too. You're a great guy.
Yeah.
Great guy. Keith Smith, the distinguished gentleman. Yes, Realty Partners. Trust the name of the game. Yes, Realty Partners. Find them online. YesRealtyPartners.com. Julia Roberts of Fulton Bank. I mean, watch the last hour and 17 minutes, and you'll see why she's phenomenal at her job. My name is Jerry Miller. This is Real Talk.
What do you got today?
Today on the I Love CVille show, we'll talk even more finance with Alex Herpy.
Oh, cool.
And one of the topics that's going to come up on today's program is the proposed new development right outside Scottsville.
Yep.
That's got much of the town of Scottsville
It's actually in my pile to talk.
up in arms.
Up in arms, to talk about, just to pivot a little bit, to talk about projects coming up. Tonight is Stribling Avenue. Southern Development is doing, tomorrow there's one out in Fulton County for 300. So I'll be watching a lot of late night TV, but it won't be TV. It'll be shows. It
will be
meetings.
Commission meetings that actually matter.
Commission meetings.
Right? Thank you guys for joining us on Real Talk. You guys have a good morning. Take care. Wait a second. I'll let you know when the mics are off.
Thanks, Julia. That was a lot of fun. Told you it was just going to be having a cup of coffee.